I think everyone's a little shocked that I just show up before 8 o'clock in the morning, Peter, is what it is. Hey, good morning, John. Hey, good morning, guys. This is Simon with toughtrader.com doing the market preview for the 6th of June. It's 8 a.m. And we're going to go through our trade plan and see what we can see. So really quickly, before I get started here, quick legal notice, if you'll take a moment to read it. Past performance is not indicative of future results. I'm sharing my trade plan with you in hopes that it'll make you a better trader. However, right, please don't follow me blindly. I do lose money. I'll tell you that right now. I have winning trades. I have losing trades. Understand my risk profile. My objective is to help you become a better trader by stopping a boom bust cycle that can be vicious. Okay. That is my entire objective in both my one-on-one coaching and in the room. It is not necessarily to provide you with winning trades. It's to teach you how to find your own winning trades, to understand your risk profile. In the room, I have some options traders with multi-day outlooks. I have scalpers, and I have swing traders, and they all have different perspectives. But the guys that are successful, okay, the guys that are successful are clear in what they are trying to achieve and how they are going to achieve it, right? They're not guessing and they're not hoping it works out. They have a pretty clear trade plan and they understand what their risk is on each and every trade. And they're pretty comfortable both in making the money and losing the money when they do, right? And they understand they're going to come out with more wins than losses. So first of all, let's take a quick look. Let's jump into it. Okay, here's ES. So what the change was yesterday was we stopped one timing to the upside, okay? We stopped one timing to the upside. See, all it has to do is trade below prior day's low. I'm going to show you this, okay? We had 1, 2, 3 days up. We weren't trading underneath. We stopped one timing, right? Now, why is this significant? It's significant because when the market's in a super strong mode, it won't stop one timing. I'll give you NQ. See this? We started one timing right here to the upside. See how we can't trade below prior day's low? I don't care who you are, what you talked about on your shorts at NQ, unless you are a skilled day trader and got really good on position, longs are simply easier than shorts when the market's in this mode. It just keeps going up. And this can go for a really long time. Here, I'll give you an example of that. Where were we? Back. Here we go. See that right there where we just start crawling up and don't stop? That can go for a long period of time. And even notice, just because you stop. So see here how we were one timing? So this is important because it relates directly to where we are right now. See how we started one timing up here in early January and we stopped right here? Okay. So what you would say is, now that we've stopped one timing, I'm looking for a change in character. That's what you would say, okay? And what was a change in character? We went from going pretty much straight up to we had 1, 2, 3, 4 days of balance. Why is that important? Because guys who are buying every dip here were expecting the market to close at highs, and we're correct because we were one timing. But if you kept executing that strategy in NQ after the 16th, right? So what was the first clue that we were no longer one timing? We traded underneath the prior day's low, right? Notice that the market still bounced back up, but all of a sudden we shifted from closes, these little yellow dots right here, that's where we're closing. Closes on high, closes on high, closes on high, to close at the low, close at the high, close at the low, close at the high, and then we went to breakout, right? But the difference here is if you kept pressing in this market, right, and not understanding what the characteristic was, these closes on low can become, in this case, it wasn't very vicious because we just resumed the one timing up. But in a normal, closer to a normal market like what we're in right now, see when we stop one timing again, see how all of a sudden the closes go from being mid to very upper end of the range to all of a sudden closing at the low, closing at the low, closing at the high, closing at the low, closing at the mid, closing at the bottom third. Okay, so that is important because what you'll see is you'll have traders going, I'm going to hold this all day long because we keep closing at the high, or even worse, they start establishing at the mid to the high thinking we're just going to keep going up, and they start getting smoked on their P&L, And they wonder how, when they made so much money over 3 or 4 days going straight up, they start losing money over the next couple of days. So that is why when you get a clue, right? When you get a clue, same thing on the downside. See how people will come in and go like, but look how much money I'm making short, close it low. Let me show you. Close it low, right? We stopped one timing here, but then we resumed it to the downside, close it low, close it low, close it low. We stopped one timing, and notice how almost like someone hit a light switch, right? We went from closes on low, and you'll have someone who's shorting going, man, this is great. I short every push up and I kill it. I kill it. I kill it. And then all of a sudden that one timing process to the downside ends, and they start getting run over to the upside, where all of a sudden all the closes flip and start closing up at the high. And that's how you can have a trader who can make a ton of money over a week, have their biggest week in a long, long period of time, because they got that entire sequence right to the downside, and then give every penny of it back and more because they didn't catch that there was a switch. So coming back to where we are right now, on NQ, we have still not stopped one timing to the downside. Why is that important to ES? Because in order to get ES to roll to the downside, you're going to have to get NQ to show some kind of at least neutrality in pushing up, and we don't have that right now. So what I would look for is a clue. Even if I'm an ES trader, I'd want to see us at least trade below 71.37 1/4. I'd have that level marked off on my chart, even if I don't trade NQ. I'd want to see, did we have the ability to, it doesn't have to hold below there. Do we just have the ability to trade below there, right? So next, let's go over to ES. So we're one timing. There's really not much in the way of just pushing up. I already posted the chart in the zones, but if we don't trade below 71.37, I'm looking for longs on NQ. I don't care what the roll downs are. It's just too easy to get steamrolled in this particular process. I'm looking for longs up until the point that we get underneath 71.37. If you want an early advance of a potential short, you're looking in your uber aggressive, you're looking for it to trade above the high, above 71.85, close back underneath the high, and then get a long liquidation just like we got in ES. But you better be on the cutting edge of okay with losing money, because that's a harder trade, okay? Or be a very good order flow trader, one of the two. Okay, let's go look at ES. On ES, that is ES, there we go. Now let's first get a big picture look here. So I'm going to suck this whole thing in. Okay, there's the high. There's the gap down right here. That takes place at 28. So I want to make look here. That's 28.46. It's pretty much 100 points above where this is the original scene of the crime, all the way back in January, right? That was the original scene of the crime. That usually wants to get revisited. Okay, we have not had the ability to revisit that yet. That 28.20 to 28.46 area is, if we keep grinding, that's the clear upside target. There's a long way to go. So there's a couple other areas that are clearly revisits the scene of the crime. See, so when you look at the big picture, right, see that this is the last place where we kind of jumped off a cliff. So look at each of these areas. I'm going to highlight them. So see how this area right here was an old scene of the crime, right? And you can see we came back up, kissed it, and rolled down, right? So the second time through, it still acted as resistance, but not really. It just acted as a balance area, right? So look how it treated each of these areas as we jump off that cliff, right? It comes back up to check up on the scene of the crime and rolls back down. So I would kind of assume, if we're going to exhaust at some point, that area right up there, just above where we're at, we're either going to have to jump that river, meaning it would have been better if we gapped over and ran, because if we run up into that, that's likely to provide resistance. Why? Because it's the scene of the crime. And think about the logic behind it. If you went long in any of this area up here before we jumped off and rolled down, so that was way back in March, right? You're in June, you know it's summertime, you know it's slow, and you know we haven't broken out and we haven't gapped. The mentality changed. If you're stuck here, right, and you gap above, your mentality probably shifts to, let's see if the gap holds, and we'll see if we can just push up from there and I get lucky. But if you don't gap above it and you just push into it, you're going to kind of go, I want to offer out into that area so I can get the heck out of Dodge. So that's your first hurdle that needs to be gotten above. And the top of that area is 27.62. We closed at 27.52. That's 10 up, right? So you want to see one of two things. I'd like to see an open drive higher through that area, hold through that area, and then you have 27.85 as a natural target relative to where we closed. And then you have the swing high behind it at 2,800 and the psychologically important area. If we can get above 27.54, I would kind of assume we're going to make the move to 28.20 to 28.46, but that has to be taken care of first, followed by 27.85 becomes your next hurdle, then 28.20 to 28.46. That's the big picture. On the downside, failure to get above 28.54. This is the bottom of the range that we trapped into at the bottom right down here. I know this is a very big picture. I'll get into more detail in a second. But that 26.97, right at that 2,700 round number, that's really the bottom, extended bottom of the trading range. You can see we try to break out of that, break down below that, trap back in, shot to the other end of the range, and we broke out. Therefore, you can assume that if we close back into 2740, we'll want to get tested, right? If we close back into 2740, I would assume we have a test of 2,700 to 2,711 coming up. I don't know how we would go about getting there, right? The path is always going to be different, but that's a balance range, and the rules are always the same. You break a range, trap back in, you're likely, whether it's intraday or weekly or daily, trap back into range, assume the other end of the range is safe for you so you don't get run over. Trap back in underneath 2740. I'd assume the other end of the range until I'm back above there, working my intraday setups. Okay, so right now we're one time into the, we were still one timing on NQ. You're probably gonna have to see that go away in order to get profit taking, and the market does not seem to want to be in a profit taking mode right now. So let's go and see what the clues would be for us to figure out what profit taking would look like, right? So let's spread this out a little bit more. Okay, specifically in here, the zones have already been posted, 27.59, 27.60 area, right? And you can see we've had a hard time just getting past 27.54 where we're floating right now. So the first clue that there's an issue, what you'd want to see, okay, so if you look at yesterday, right, we traded above the prior day's high. So I'm going to break this out for you. We traded above prior, let me erase all these lines. Okay, that was prior day's high. This is the 30-minute bar. We established above, we established below, we backside tested, and we long liquidated where? To the bottom of the range, where once again we decided to capture a bunch of sheep and serve them up for dinner as the shorts ran up. This is where we in the room got long. 27.41, I think, was the long yesterday afternoon, along with the calls. By the way, if you took the calls, which were the, and guys, I posted this on the stream. If you took the June 274.50 calls that expire today, right, you could buy them for 60 cents. They went out at $1.17. You could buy them for 65 cents. They went out at $1.17 at the end of the day, guys. For members in my room that I've been talking to you about options, that is huge. That is a intraday double. And if you're having difficulty managing your P&L, or you're getting frustrated that your stops are taking you out of the trade, options, once you learn about them and you understand the risk involved, okay, are a good alternative to substituting the risk you're taking on that futures trade. Let's say your risk is you trade 2 cars, so let's say you risk $400, but you're having a series of either you're getting nervous and taking that trade out for a loss, okay, only to watch it go profitable, or you just get nervous and take the trade out as soon as it blinks against you. You commit that $400 and you go, I either achieve my target on this trade, let it go to zero as some alternative in between there, but you can't get stopped out for 2 or 3 points, and the wiggles won't bother you nearly as much. That's why I'm introducing the options trading into the room. So that being said, we had a lot of good stuff going on down here. And let me go through what was here. Look at the rotation: 27.54, roughly the high; 27.39, roughly the low. I've been stressing 10-point rotations give you key locations in summertime when it's slow. Okay, 10-point rotations down. Secondly, buyers are in control. You could have shorted this and been aggressive and made money. I don't know that I want to be on that side of the trade. I definitely wanted to be on this side of the trade and long. If I'm going to press a side, I want to press the long side of the trade If I'm conservative, I want to make sure that is accompanied by a 10-point rotation. That'll keep me on the right side of the trade the majority of the time. And then lastly, when you look at that low, I highlighted this yesterday in real time. Wasn't like I did it came up post, and I said, still have it highlighted. I said, look at the tick divergence at the low. It wasn't like slight, it was massive. When we hit that new low, there was no broader market participation in that tick divergence. And then the other thing that's important to realize, because I run into this a lot with traders, it's summertime, so it's slow. What most traders want, including me, is this. This is nice. This is nice. This is challenging, right? From the time we entered that trade on tick divergence, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70 minutes until it was free and clear to start making its rotation up. Now, realize from the target, we were at the bottom here at 41, I think, and a quarter. I think 43 and a quarter was my initial scale. I missed that, right? You had to make a decision as to whether you wanted to take the chance to see if it was going to break that low or not. I had my stop 1 point behind the low. I sit in these trades. As you all have seen, I've taken stops and I've taken wins. I'm long on that trade. You've got to look at your P&L over time to figure out which strategy is best for you. I just assume take my stop if I think I have the right location. I thought I had the right location. First scale, and then I was able to trail up. As y'all know, I was pretty exhausted yesterday. So while I was napping, I was luckily paid. And this is where we bought those calls, and they went for a double by the end of the day. And the target was 27.54 up for obvious reasons. That's where we're trading this morning. We traded a little bit above that. That's a great trade right there. That is worth waiting for all day long, okay? And lastly, I'm going to go through and show how that looked from the algo perspective so you understand what we were dealing with, what went right, and what went wrong. But there's nothing more to discuss on this trade. You get a setup like this with this kind of tick divergence, I'm willing to lose money on this. You don't have to know anything about order flow or anything else. I'm willing to lose money on that trade. 10-point stretch, slow summer day, into support. We trapped top of the range. We rolled all the way down because what's happening here, think about the sheep, right? That's what you want to know is you don't want to be the sheep, but you want to eat the sheep. Everyone wants lamb for dinner, lunch, and breakfast, okay? Sheep getting trapped on top. What are they thinking? Trend day up. It's going to run. They all load in. They all get stopped out. They panic. Long liquidate, right? Everyone who buys the 50, 60, there's nothing inside this range all the way to the low. We start dancing down the low. Everyone's like, all the sheep get confident at the bottom. They say, this is it. We're going to correct now. The market's gone up too much. Let me short, let me short, let me short, let me short. I'm going to show you how this looks in order flow in a minute, okay? And then they get back above, and now we're going to roast all those sheep. We're going to take them all the way back the other way for most likely the sheep up here with the sheep down here, and they get roasted on both ends. And that's how someone goes, how can I be down 10 points on a day where the market was only up 5 and the whole range was 10 points? Well, that's how you get emotional about your entries and you don't have the ability to trade both sides of that coin. Now, one last piece before we open. Let's go look at how that looked from a delta standpoint. Which one do I want? Here, this one's all clean. Okay, so going back to yesterday. Screen. There we go. Okay, so this is without zones or anything else, right? This is previous day's high. So you'll notice this is 8 a.m. That's 8:30 right there. We open up. Notice that we get above Globex high, right? This is previous day's high. So the blue colors and the pink colors tell me pink colors are heavy delta sellers, blue colors are heavy delta buyers, and the orange bars are, I'm not going to give the formula, but they tell me the volume in this particular bar is the heaviest volume of the preceding 10 bars. Okay, it's significant volume in that bar. So look what happened. We had the highest volume relative to the prior bars right on top. Right? See this right here? This guy is my strongest buyer right here. Why is that important? Not only am I getting underneath previous day's high, notice I come back in, heavy delta sellers. Notice that I come back up for a backside test. I should have taken this trade and I hesitated. I should have taken it because I had an easy stop right against this, right? And it dawned on me I could have even waited for the first rejection bar and still killed that short. I didn't take it. I made the same mistake twice. I won't do it today. Next time up, notice that this is my best seller at 47. I didn't think we were going to get there. I didn't think we were going to quite get there. I tried to short. I had a limit to short at 47. I missed. I lowered down to 46 and 3/4. I missed. I simply should have waited for the rejection bar and short at the bottom there and stopped right on top. That was a 2-point stop in exchange for a 6-point win that it was almost straight vertical. So I'll be making that change today in how I'm executing off the algo. If I don't get right into the apex, I'll take the rejection bar with the 2-point stop. Basically, I'll stop the top of that bar or less. It should look just like this. It just shouldn't get to the top of that bar. It should look exactly what this looks like on the rejection bar. It should look exactly like this and not get back into it. If it does, the trade's busted. You can probably even put that at 6 ticks. Realistically, it just shouldn't get back to the top of the bar. And you want to keep that stop as small as possible. Now look at the bottom, right? So see when we were coming down, this guy became my biggest seller right here. Now what we wanted to do is when we established above, normally you'd want to say, hey, that should hold and it should push back up. But so there's competing interests here. You have prior day's low here against a single intraday bar. Maybe Ron's thinking open drive lower in NQ. Where are we trading NQ? Are we already rolled all the way down? I needed to stay up long enough. I didn't get my options sold at the end of the day. I needed to hang up long enough for me to dump those things. Let's see. Maybe NQ's gone negative in the morning. Hold on a second. Okay, so push up, right? Roll down, push up. I tried a long right here, right? Stopped out right there, no problem. That was a 1.5-point stop for me, I think. Maybe 2, I forget exactly what it was. But I tried to execute the reversal. If you'll look, there was a difference here. See this bar and this bar, guys? So this is for guys in the room. We talk about this quite a bit. Okay, look at the delta on this bar. Look at the delta on this bar. Heavy volume on this bar, not heavy volume. So I took the stop here. I took the long right off this bar at 41.25. That is a good bar. When you get that, heavy push down. So now look at the relationship, how we went. We got above. We came back and tested this bar one more time because we had our bigger sellers right up here. So I'm going to compact this up so you can see how it went. See how we danced in between there? But the big one to get over was this guy right here. See this? See, watch how this bar, okay, once we were underneath it, see how that bar acted as the pivot? And that was the distinguisher between getting above and below, which is why it's important that you be able to easily identify. That's why order flow is important, easily to be able to identify where your biggest seller is. And once you got above this guy, I understand that it failed here. I get that. But it's the same concept as with the anomalies. The over-under pattern is really important. They tried to push underneath this guy, and they simply couldn't. Yeah, that's what I'm hoping for, Peter. That's what I'm hoping for. So as soon as they do the open rotation, I will be gone on those. So, guys, my plan is to buy the dip today. I know that's shocking, but until NQ trades below prior day's low, and I will execute off the algo. Instead of executing into it, if I can't get into the apex, I will take the first bar down. That'll be the change in my trade plan today. But I expect to have another good day, guys. So for the guys on YouTube, if you're interested in joining us in the room and seeing how the trades unfold through the day, just send me an email. It's tradertough@gmail.com. I'll be happy to extend you a 5-day pass. Trade safe, right? Manage your risk. It's the best suggestion I possibly have in the whole wide world. Right click and have a great day. That's all I have to say. If you liked it, if you'd please hit the like button, I'd really appreciate it. It helps me with customer service on YouTube. And let's get tick inserted here. Symbol tick. Plot. There we go. And let's hold on a sec. Let's spread this out. Okay, so gap up, right? Again, we're gapping up. I'm not a big fader. If you're worried about getting run over on trend days up, you're not selling this, right? Oh, I just moved that. That was a mistake. Hold on a sec. Where did I had to have that right up here. Okay, so where are we on NQ? Let's spread this chart out. You know, trade stations become more and more just not fun to use. There we go. Right into Tuesday's high, above Tuesday's high on ES. It's weird how they can't just get those things lined up, isn't it? And I'm going to take care of dumping those calls. Let's see where we're trading right now on those calls. We are not open right now, but as soon as those open, June. They're not open yet, but as soon as they open, I will. I'll be dumping that position. I meant to dump it at the close yesterday, and something went wrong with my platform. So, long story short, I'll be getting out of those calls, and we'll look to rework it. They are attempting to push up. I really wish we get to these opening cycles pretty quickly. And we'll go from there, guys. Have a wonderful day. Thank you for joining on YouTube, guys.